Okay, so Oregon just announced health insurance premium hikes of over 15% next year. And I need to unpack why this matters, not just for Oregonians, but for everyone watching healthcare costs skyrocket. Let's start with the shocker. A 16% average increase for individuals and 15.5% for small businesses. At first glance, that sounds like a random number, but dig deeper, and it's a symptom of a broken system. Here's the thing, insurers like Motor Health are blaming rising medical costs, tariffs on equipment, and fewer competitors in the market. But wait, if tariffs and medical costs are nationwide issues, why is Oregon hitting 15% while other states aren't? That's where the rabbit hole starts. Let me break down what's really fascinating here. The state regulators claim they are heroes for lowering the proposed rates from 17% to 16%, saving consumers $30 million. But $30 million sounds like a lot until you realize Oregon has nearly 4 million residents. That's roughly $7.50 per person saved. Is that a win or just a PR stunt? This raises a deeper question. Are insurance companies testing how much they can squeeze us, knowing most people can't say no to healthcare? And why are regulators patting themselves on the back for shaving 1% off a catastrophic hike? Now, the ACA tax credits expiring last year, that's a silent killer. 120,000 Oregonians suddenly lost subsidies if they earned over $63,000 individually. But here's what the article doesn't scream loud enough. This isn't just about Oregon. Congress let those credits die, and now states are left holding the bag. What many people don't realize is that this is a political chess move. By letting subsidies expire, the door's wide open for insurers to jack up prices, knowing middle-class families can't afford to protest. It's a slow burn, but Oregon's reaction, suing the federal government over new rules that gut out-of-pocket caps, shows this is a war between states and the feds over who controls healthcare. Wait, let's get personal for a second. If you're a small business owner in Portland paying $509 to $754 a month per employee, what's your move? Hire fewer people? Cut wages? Or just accept that healthcare is now a luxury? This isn't just a policy debate, it's a survival crisis for Main Street. And the federal rule changes Oregon's suing over. They are pushing for cheaper, bare minimum plans that only cover emergencies. Sounds great until you realize that skimpier plans shift costs to hospitals, which then raise prices for everyone. It's a vicious cycle. Here's the angle nobody's hitting. This isn't about insurance. It's about who bears the risk. Tariffs, medical inflation, corporate exits from the market, these are systemic risks being shoved onto individuals and small businesses. Oregon's regulators are playing whack-a-mole with rate hikes, but the real story is that the safety net's unraveling. And if Congress won't extend subsidies or regulate insurers, states are stuck with a lose-lose choice: raise taxes or let healthcare rot. So, what's next? If you're sitting there thinking, this won't hit me, guess again. Oregon's premiums are a preview of what happens when political gridlock meets profit-driven healthcare. The bigger picture. We are all just one policy change away from medical bankruptcy. What do you think? Should healthcare be a right, or a privilege dictated by zip codes and income? Drop your take below, because this isn't Oregon's fight alone. It's all of ours.